Now let's bring in Jefferies analyst to cut his Walmart recommendation to hold from buy. Daniel Binder, Jefferies senior equity research analyst, joins us now from his firm's trading floor here in New York. Welcome back to Bottom Line. Always a pleasure to have you on.
Thanks for having me.
Well, according to an internal memo obtained by Bloomberg News, through the first 5 months of Walmart's fiscal year, there were nearly 83 million fewer visits to Walmart's U.S. locations than a year earlier. And this figure pertains to Walmart stores open at least a year. What happened?
Well, I think Walmart continues to face a combination of both macro headwinds as well as competitive pressures. Obviously, the macro headwinds, I think, are fairly obvious. That lower income consumer is feeling more pinched than ever, particularly with rising food and gas prices. As a percentage of their income, it's a greater proportion than the average household, so they feel that pressure. And then on the competitive front, you've got really the boundaries blurring across retail, where more and more are selling a lot of the same items that Walmart sells, and Target's a prime example of that.
Well, I guess what Wendy Liebman of WSL told my partner Heath Prabhakar, that although the recession may be over now officially for 2 years, it's not for people who shop at Walmart.
That's right. If you look at the unemployment rates for lower educated households, it's up around 15%. That's substantially higher than the average, and those folks are still feeling a big pinch from this recession.
Daniel, Walmart did return thousands of products to U.S. store shelves. That was an effort to lure customers back. But the fact that they didn't come back, is that indicative of the overall economic climate, or is something else at play here?
Well, I think that Walmart has undergone a number of changes over the last couple of years. And as sales have weakened, they have struggled to figure out what went wrong. One of the conclusions is that they cut too many SKUs from the stores. So they've gone back, they've added about 9,000 SKUs back into the stores. Just to give it, put that in perspective, it's probably about a 9%, 10% cut originally. They're about 90% of the way to adding those SKUs back. And the point of our downgrade yesterday was that we're a little bit surprised that we haven't seen more progress thus far. And I think part of that is simply economic. When you've got a lower household income struggling to get by just to make their food and gas bills, there's not a lot left over for discretionary products.
Well, Daniel, two recent shopper surveys, one from Morgan Stanley, the other from retail consultancy WSL Strategic, they show that Walmart's core low-income customers, the ones you were talking about, they're shopping less, but they're also going to other retailers more often.
Well, that's right. And if you look at the dollar store channel, for example, those stores tend to be more convenient, closer to people's homes. In a period of rising gas prices, people see less of a benefit to drive 20 miles, maybe, let's say, to Walmart and chew up that gas versus perhaps going to a dollar store where there's a lot of opening price point product.
Daniel, does Walmart still have the lowest prices, or are Dollar General, Kroger, and Target chipping away at that mantle, and would further price cuts help Walmart?
Walmart still has quite a price advantage over a number of its competitors. With that said, they're not happy. We've spoken to them about this recently. They would like to widen that price gap, and they're willing to make that price investment alongside with their vendors. So I think you are going to see prices coming down more. I think the question is there a diminishing rate of return? If you cut prices further, is it going to really persuade that customer to drive further? Is it going to persuade them to buy that discretionary item that they really weren't able to before? So I think in some areas it probably helps. Other parts of the store, I think it could be a little bit tougher.
Daniel, in our last minute yesterday, in a note to your clients, you wrote of Walmart, quoting here, "The data points don't look good." What are the downside risks for sales in the second quarter and through the end of this year?
We had been previously forecasting the U.S. comp store sales, excluding Sam's, just specific to the Walmart stores, at about 0% year over year. We reduced that to a decline of 1 to 1.5%, but I would not be surprised if we maybe even were as low as 2 to 2.5%. It's a large company. That's a lot of dollars. The company has done a reasonably good job of managing expenses along with those softer sales, but it's still challenging times for Walmart.
Daniel Binder, Jefferies senior equity research analyst, joining us from his firm's trading floor here in New York. Daniel, always a pleasure. Thanks so much.
Thank you, Mark.